ethics in marketing strategy and the role of corporate culture, value system as reflected by the organization's socially responsible strategy and its correlation with successful marketing strategy implementation. We will conclude this module with our discussion on reputation, which in a way encapsulates all those issues like ethics, values, responsible behavior, pursuance of the triple bottom line of people, planet and profit, a continuous engagement with the stakeholders, concern for the environment as represented by frameworks like the natural steps and so on. So, this encapsulation in this concept of reputation and how reputation is the bedrock of successful marketing strategy today will be the subject of this session. So, when we look at an organization and we try to understand its current well-being, the success of its marketing strategy, we often look at some numbers like revenues, margins, growth in market share, growth in mind share and so on. But mostly we look at financial numbers. And people have actually, some researchers have used the analogy of a tree. Sometimes you can be misled by looking at the leaves and the flowers and the greenery, the lush foliage of a tree and consider that to be a very successful tree, a healthy tree. But you can be wrong because there might be insects, there might be white ants eating away the roots of that particular tree which apparently looks healthy. So, it will within a few days, months it will collapse. If there is a storm, then because of weak roots that tree will not survive. In some way, as we show in this metaphorical depiction, an organization and its success in the marketplace can somehow be related to this analogy of a tree. So, we normally look at this financial performance, and this can be compared with the leaves and the flowers and the colors and so on. But truly speaking, this is what is our marketing objective: brand resilience. The resilience, as you know, is also kind of a connotation of robustness, flexibility, the ability of the brand, of the organization to face adversity, to face ups and downs, and yet be capable of bouncing back, regaining its former position or even better. So, obviously, the brand resilience will be based on tangible assets, which we will discuss, things like productivity or quality or cost performance and so on. Many of the concepts that we have discussed when we have looked at the financial underpinnings of marketing strategy. And as we know that to excel in today's market, just as we have to create differentiated products and services, focus on features. So, that product feature differentiation, all those depictions of tangible properties, we know in today's world they must be complemented with continuous productivity improvement, continuous optimization of cost, so that an organization can simultaneously manage operational excellence and product leadership. We also know that customer intimacy becomes an important requirement as an organization matures. So, business processes which actually give us the edge for a low cost strategy or operational excellence strategy or customer intimacy strategy, coupled with tangible assets in terms of product performance, quality and so on, together definitely create the brand resilience. But what we are presenting here, or today's discussion point, is that to be able to achieve these tangible assets, to be able to achieve this business process excellence, we have to look at the roots of the organization. We have to look at the foundation on which that organization's marketing strength is built. And that we are saying is reputation, which is a kind of an encapsulation of the human and structural capital, as well as the organization's engagement, responsible engagement with the triple bottom line concept of people, planet and profit, which is based on all permeating ethics and values of the organization. And if we look at the brand resilience of Indian organizations like the Tatas or Godrej or many other successful long enduring brands in India, we will understand that that brand resilience has a high connection with the reputation of that particular organization or that particular group. So, the question is that what is the role of marketing management in nurturing this reputation, be the custodian of this reputation, because the marketing function, the sales service function, the marketing function in a broader sense is the front line, is the main interface between the organization and the stakeholders like the customers. And in some way, if we take the internal marketing concept, then it is also the interface with the employees and other stakeholders. And in that sense, if we consider strategic marketing as a custodian function of reputation, then let us look at that how we strategize to manage, to enhance, to nourish that reputation. So, in the industrial age, maybe 20 years back, 40 years back, advertising was still a very important function. Even today it is, but the nature of advertising, the nature of promotion in the 4P, the major element of the marketing mix being promotion, it is still very important, and we will discuss that in a subsequent module in depth, the whole issue of marketing communication and its different building blocks, and how those building blocks are getting realigned, new blocks are getting added for strategic marketing communication. But one fact remains, that today, because of the intensity of the media coverage, the breadth and depth of media exposure for a consumer, it is very difficult to project the real value of an organization, all that goes, all that will be constituting this brand resilience. It is very difficult to communicate that in 5 or 10 seconds on a TV commercial. And that is why the key manifestation that we are looking at here, which leads to the financial performance, is this brand and its resilience and robustness. And that is really coming from reputation. Now, let us look at some elements of building this corporate reputation. So, as you see in this diagram, we look at that reputation in a way looks at the corporate social responsibility, looks at the physical environment in both sense, internal as well as external, and how the organization relates to it. That means what kind of environment, which is part of the quality that we maintain inside the organization, and how we behave responsibly with the bigger concept of environment at large. And all the issues like experience, attitude and behavior of employees, our engagement with communities, which is in a way connected, related to the environment, our communication, our quality of goods and services, organization structure and culture, the financial performance. So, in this diagram, we kind of go into a little bit more detail compared to this analogical or metaphorical diagram. And we look at, therefore, that what are the building blocks of corporate reputation, and how do we actually actualize the reputation. The importance of reputation as the key cluster of intangibles in the financial performance, in the market performance of a company, is very evident from these concepts like MVA and EVA, which we will discuss a little later. So, the market value added, MVA, is usually the difference between the market cap or capitalization of an organization minus the book value. Sometimes we also look at this as the market cap to book value ratio. Obviously, for a good organization, this is many times greater than 1. So, which means the value of the company is not the value of its machines and land and building and all those tangible things. In fact, one of these studies has shown that in 1962, interestingly, that 62% of an average company's value was represented by the physical or hard capital like machines, land, building and so on. or the mining mines and land bank and all those kinds of very tangible elements. By 1992, that had come down from 62% to 38%, and by 2000 it was as low as 20%. So, which obviously means that this market cap of good companies, reputed companies, are many times more than the book value, or this ratio is many times more than, and obviously therefore, that which gives this multiple is the topic of today's session, this whole issue of reputation. So, this is presented in another way, that in the old economy and the new economy is actually kind of, you can look at it like an inverted pyramid, and really the issues that connect with the customer is right on top, and obviously that is possible the way your people are capable of delivering that, create that customer pull, the customer advocacy, the customer intimacy, the emotional connection with the customer that we have discussed before. So, this customer focus, creating the customer advocacy, which is what we normally look at brand capital, is at a much higher level compared to, I mean, these remain very important, the working capital, but as we see here that those high working capital regimes are today giving way to a low working capital by depending on the network, by partnering, by alliances, well exemplified by the enduring marketing strategy, successful marketing strategy of companies like Dell, or in that sense many of the automobile companies, where they actually depend on a whole network of suppliers and channel partners working together to deliver the value to the customer, which we have discussed before. And as you can see here from our earlier diagram, that reputation actually emanates from these factors. Another very interesting research work, this is something that is from 2001. It shows that, for example, in a pharmaceutical company, the market value as a multiple of book value is over 30 times. And in fact, in all of these, as you see here, the market value is 5, 10, 20, 30 times of the book value, and that comes out of reputation that creates that kind of brand worth. Because of this importance of reputation, every year we have important publications. So, there are famous charts that have always been published for last 40, 50 years, like the Fortune 500, or today in India we have the BS 500 or the ET 500 and so on. But more and more those numbers oriented revenue growth, profit growth performances are seen together with results like most admired companies. This is equally famous on the Fortune.com website. So, just as the Fortune 500, which is mainly based on financial performances, today we pay equal heed to this whole concept of being an admired company, being the best place to work at. Or we have concepts like India's most valuable companies, an annual publication from Business Today, which is based on the MVA and the EVA concept, or the Financial Times FTSE4 for good index, or the most respected companies. So, as you see here, the market the strategic marketing function definitely has to contribute towards these indicators which we have always looked at. But at the same time today, it is kind of a very nice diagram that depicts this not either or, either this or this, but today's need of creating an AND function in terms of the marketing strategy performance, that we must be able to maintain our salience on these indicators as well as on these indicators. These are indicators which we have discussed in depth in the previous session when we discussed about the triple bottom line, or the natural steps, the 4 natural steps and so on. So, it has the shareholder, the customer, the employee, the society, the partners, and we have here the way we need to measure how we are doing on all of these counts. So, just as we have to look at customer satisfaction survey, we have to look at also shareholder satisfaction survey, we have to look at employee satisfaction survey, we have to look at the media reports and various kinds of incidents if there are adverse incidents, and we have to look at the health and safety records, we have to look at our alliances and alliance partners' opinion. So, you see, it is a much more holistic approach, and these are, many of these are intangible elements because these are based on subjective opinion. So, they are intangible, but those intangibles we understand more and more that they are inalienable from superior performance on the tangible front. And so, therefore, brand reputation, organizational reputation, and our reputation with the stakeholders is a kind of a troika that we have to manage in our marketing function. We will be discussing the integrated marketing communication concept subsequently in the next module. But today, I think in the reputation management, a key function that is now gaining more and more ground is this whole thing that we normally call public relations. It is kind of a misnomer because it is not only public, but it is also deeply connected with managing the stakeholder conflict, our ability to manage internal communication, corporate publication, investor reports. So, these are all therefore today functions of the broader or the extended involvement of marketing strategy in creating, managing, nourishing, enhancing reputation through this so called PR function. So, this function today therefore embraces many interfaces, internal interfaces as well as external interfaces like media, stakeholders, and it has to deal with crisis if there are sudden problems like this very ably recently we have seen how companies like Ford or Toyota, they have managed proactively. If 4 parts were found to be defective in a particular lot, they recalled the entire lot and provided free replacement. Sometimes companies do that across the world. Fantastic capability of what we call reverse logistics, collecting the products from the customer, taking it back and then forwarding it after the necessary rectification back to the customer. So, this particular diagram in many ways shows that if we look at reputation as another name of the super brand creation, and super brand incidentally is a concept that is now gaining popularity across the world to measure brand salience or brand equity. So, the specially honored brands are always based on reputation, and the marketing strategy has the responsibility of managing that through these various functions and interfaces. We discussed about MVA, EVA or the economic value add, which is rate of return, or one can call it the net operating profit minus the cost of capital. We can expand it, the weighted average cost of capital multiplied by the capital employed. That means this part, if you just put your money in some bank investment, fixed investment, the return that you can get, you must be able to the business get a return higher than that. And to be able to do this, we know that to be able to do that, that means to achieve these financial performances which actually create that higher rate of return which beats the rate of return that you can get from a bank or a company fixed deposit. This higher rate of return, as we discussed before also in the previous session, does not come only from being ruthless, being cutting costs all the time, but it actually comes very clearly from this holistic approach. So, which means that this, just as the MVA shows the importance of reputation and the intangibles, the EVA is also created by the intangibles that we saw right in the beginning in that tree diagram, which means it comes from the human and structure capital, it comes from the ethics, values and so on. So, as we see here that the financial performance, the market value add, the economic value add, they are coming from definitely financial activities, business process excellence, all those that we have discussed in the earlier session, but it is also coming from the soft elements, normally called those cultural issues, ethical issues, the values of the organization. And as many people, as many researchers or authors have pointed out, that the soft side of this strategy is in many ways harder. So, to grow revenue in the marketplace through the traditional marketing is seen sometimes as an easier thing to do rather than compared to creating a commitment of all the employees to customer satisfaction, be whatever may be the situation. It is not an easy thing to achieve, and that is why we know that, for example, there are so many airlines in the world, but this all round focus on customer benefit, customer convenience, as depicted by airlines like Singapore Airlines, have provided them a brand resilience for a long period. And so, this soft side is a very, very important element in creating a enduring competitive advantage, because this reputation, since it is created by this complex network and holistic execution of strategy, it is not easy to emulate, and because it is inimitable, it provides an enduring source of competitive advantage. And another very important point is that this reputation is another very good depiction of the concept that we have discussed in the, when we discussed about service dominant logic of marketing. This co-opting the customer, co-opting the stakeholder in creating this reputation value. The reputation is a two-way process, obviously. Therefore, reputation cannot be created just by the organizational actions unless you take the feedback and continuously enhance. Therefore, you need to be in a closed loop function with your stakeholders, and that is why it is a co-creation activity, which again is another reason why it is not very easy to imitate, because it involves the entire organization process, the business model, the business process. So, the tangibles and intangibles are like the yin and yang concept, as we have seen here in this diagram, need to be put together to create that unassailable competitive advantage by understanding that reputation building is the ultimate aim of marketing strategy, or the superordinate goal of the marketing function.